So, David, as buyers are looking to engage BBA, what's our perfect client?
Um, I think our perfect there's several aspects of what does a perfect client look like. Number one, I think obviously we're looking to work with someone who's going to be able to successfully close the transaction and buy the business, because we have we have a nice long line of people. Fortunately, we're blessed that we have a lot of people wanting to work with us, and we want to make sure that we're working with folks who desire and have the wherewithal to get a deal across the line. That doesn't necessarily mean they're Mr. Moneybags or they have a rich uncle, but they need to have done their homework. They need to have put the effort into structuring a deal that we can evaluate with them and make sure has a real viable chance of closing. One of the things that concerns me a lot of times about buyers is they may have done they may have only done a little bit of the light lifting in terms of the way they've structured their deal. They've done it where it's easy for them in terms of there's a very light down payment. They've done it in terms of not really negotiating hard with the seller for the seller note or the seller holdback on the deal. So the seller doesn't have a whole lot of risk in the deal. And they're really expecting the bank to come in and fund 80, 85, 90% of the deal. And those are hard deals to do. I really would rather see a buyer who's gone to the mat and really negotiated the best deal that they can, because that gives the deal a higher likelihood of success. Another thing we look for is having a buyer that has some industry knowledge. We're broad generalists. We've got experience we got deep experience in multiple industries, but we've got broad experience across all of the business realm. But a lot of times there are businesses that have some specific nuances. Healthcare businesses come to mind as one of those. Logistics and transportation businesses come to mind as one of those. So if you're looking at one of those type of businesses, we want to make sure that you or your team have some deep understanding in that, and enough of an understanding. To me, a business owner, and this is probably kind of a broad qualifier of anyone we would ever want to work with, if you want to be an entrepreneur and a business owner, you can be a specialist in a particular industry, but more important than that, you have to be a generalist. You have to know enough about every aspect of the business to be able to manage your advisors and your senior leadership team and be able to ask good questions and get the right information so that you can make decisions. So when we advise people about staying in their lane and working with a business in an industry they have some familiarity with, largely that's because it's easier for them to know how to ask those good questions. So I'd like to see that. And then lastly, we do have a little bit of a size criteria, and it's frankly the economics of our business. And we're happy to discuss that with you in terms of the specifics. But we need to have a business that there is a bit of a substantive number to the transaction value. And the businesses that are really below probably $400,000 or $500,000 in EBITDA are very hard businesses for an advisor to work on, because those businesses tend to be, and this is not always the case, but those businesses tend to be less processized.
Right.
So there's way more work for your team to do in terms of systems and processes and operations. Those businesses tend to have much less formal accounting processes and accounting data. A lot of times it's the owner or the owner's family member that's keeping the books, and they're not trained in proper accounting procedures. They don't have an accountant. They don't have reviewed financials. They're not following generally accepted accounting principles. So our financial due diligence team has to really dig to make the numbers make sense. And likewise, they probably don't have very very much depth in terms of their legal processes and their legal documents. So there's a lot of risk involved in assessing all of that. So all of that kind of comes together to make those smaller transactions really much, much harder for us to do. An associate of mine back when I was doing investment banking in the equipment finance and asset-based lending world used to say, as I would bring us a small transaction to finance, he'd shake his head and he'd say, Dave, remember, there are no small deals, just small fees. And really those small deals are the bigger deals in terms of the workload, but we can't charge what that worth, that the value of our work on those deals, because the value of the deal just doesn't justify the fee. So we do have to kind of pass on those, unfortunately.
So quick question, David, as you're looking at doing deals, right? So this is a big question that comes up all the time. How long should we be putting in a schedule to actually get a deal done from kind of start to finish? I know that's a very random kind of question, right? And there's all these other caveats around it. But, we get people that come up and say, I want to get a deal done and I want it closed in a month. Yeah. Right. So can you give us kind of some framework around how long to be expecting around a decent sized deal?
Yeah. So there's a couple of factors that go into that. Number one, what is the deal structure? As Carl Allen over at Dealmaker Wealth Society says, price and terms, right? If you're doing a deal that's largely a seller finance deal, there's no third-party lender. Any money that's being paid at closing is either coming off the balance sheet or coming from the buyer's bank account. We don't have to get a bank or an investor involved. Those can be done pretty quickly. If you want to do due diligence before you close that deal, and I'll talk a little bit about why you might want to do that, but if you want to do any kind of due diligence before you close that deal, then realistically, I think you do need to plug in 2 weeks to a month. And the reason I say that there's a gap, I mean, that's a pretty big gap. I mean, it's 100% variance. But really, all of these timelines depend on how responsive the counterparties are that we're working with are. If we provide the seller the due diligence checklist and they don't respond with any information for 3 weeks, we're not going to be finished in a month. If they respond within 5 days, we could be finished within 2 to 2.5 weeks. It's not a one-shot thing. When our first list of questions result in us reviewing a lot of information, and then we formulate more questions or ask for more details. So there's got to be a little time for us to go back and forth. So I think for a fast deal where there's not any outside parties to speak of to deal with, it's just the buyer and the seller and their immediate advisors, a month is feasible. 2 weeks is aggressive, but could be done if all the planets align perfectly and Venus is in retrograde and there's an eclipse.
What about SBA type loan deals?
SBA type loan deals are a different animal, mainly because the banks are really backlogged, and quite frankly, with where we see coming up in the not too distant future with some changes in the political landscape that we've recently had, if business transaction volume picks up, the banks are going to get slower because they're not going to be able to add qualified underwriting staff as fast as the demand for their products is increasing. So we've seen SBA deals. I've seen SBA deals done in as fast as 60 days, and I'll qualify what that 60 days looks like. But I've seen them also take as much as 6 months or more. If you go to other sources, for example, the U.S. Department of Agriculture also has a loan guarantee program for businesses that are in rural areas of the country. I did one of those transactions a number of years ago with a client. It was a very complicated transaction. It was a refinance. The business had a lot of hairs and warts and scars. It was a pretty nasty deal and therefore complicated deal to get done. But it took us 13 months from the time we got the term sheet to the time we closed and funded the deal. So those can take a while because there's a lot of bureaucracy and a lot of steps, and the government doesn't move fast. But let me go back to my first statement I made about it can be done in 60 days. The first question, anytime anybody gives you a deadline of how long something is going to take, your next question could be, okay, that's great. Starting when? Are we talking about starting today, or are we talking about at a future point? So when I say an SBA deal can be done in 60 days, really 60 days from the time the bank gives you a term sheet expressing how they would plan to structure the deal from term sheet to closing and funding. 45 to 60 days is fast for an SBA loan, but it can take you 2 to 3 weeks to a month to get to the point of having a term sheet. SBA lenders respond a little bit differently. Some of them will look at a very cursory level of information and issue a term sheet. Mm-hmm. But if they do that, then they're going to be on the longer side of that 60 days because they're going to require a whole lot more information after the term sheet in order to issue the commitment letter and actually close. Other lenders that we've worked with, they actually ask for a lot of kind of a pre-due diligence, almost the same thing that a buyer would ask for when they're initially screening the deal. They want 2 or 3 years of financial statements. They want tax returns. They want AR and AP agings. They want equipment schedules. They'll look at those and they will do what a lot of them call pre-flight that deal with the credit committee at the bank and get a thumbs up of, yes, in principle, we like that deal. And if they're doing that, that can take 2 to 3 weeks to a month to complete. Then you get a term sheet, but then the underwriting process might be more to the 45-day period when you get that.
Awesome.